Hello and welcome back to my channel. Today we're going to wrap up our series on underwriting guidelines for 2 to 4 unit properties. This episode is specifically for veterans who are eligible for a VA home loan benefits. So we're going to delve into the concept of house hacking for veterans, which involves buying a 2 to 4 unit property. So why would you do this? Well, when you buy a multi-unit property, you can live in one of the unit and rent out the others. And this not only helps you pay your mortgage, but can also assist in qualifying for the loan itself. So when you buy a 2 to 4 unit property, you can live in one of the units and rent out the others. So this strategy helps you cover your mortgage and can even help you qualify for the loan itself. So before we go any further, it's important to understand that each loan program has its own set of guidelines. So we previously covered Fannie Mae, Freddie Mac, FHA underwriting guidelines in just separate videos. Each of these programs have its own unique features and restrictions. So to qualify for a VA home loan, you need to be a veteran and meet certain eligibility requirements. We won't be going into those requirements today, but if you don't meet them, you might want to consider an FHA, Fannie Mae, or Freddie Mac type loan. Each loan program has different types of loan to value, down payment requirements, credit score requirements, rules about non-occupying co-borrowers, reserve requirements, and rules about accessory dwelling units or ADUs. They also differ in whether you can use rents to qualify for the loan, and we'll be covering all those aspects in detail. With VA loans, you can use them for a new home purchase, a construction to permanent loan, or an energy efficient mortgage. The maximum loan to value is 100%, meaning there's no down payment requirement, whether you're buying an existing home, building a new one, or going for an energy efficient mortgage. Credit scores are an important factor in loan approval. However, the VA does not have a specific credit score requirement. It's one of the myths that I hear quite a bit. So it's up to the automated underwriting system to determine if the credit profile is a good fit for the loan overall. So some lenders might tell you that your credit score is not high enough, but remember, the VA does not have a credit score requirement. If a lender tells you otherwise, it might be time to find a different lender that doesn't impose additional restrictions. So non-occupying co-borrowers or people who won't be living in the property but will be on the loan application are not permitted with VA mortgages. So make sure that you're talking with your loan officer if this is a path that you'd like to go down to make sure that you can fit within the guidelines. Reserve requirements are another important factor. So with VA loans, you're required to have 6 months of reserves for the property. So this is slightly higher than other programs, but it's because there's no down payment requirement. The VA wants to ensure you're prepared for any potential issues that might arise. Accessory dwelling units or ADUs are typically detached units separate from the main property. The VA doesn't specifically mention ADUs in their guidelines, so it's up to the lender's discretion. But if the VA doesn't provide guidance on a particular issue, lenders often follow guidelines of another government program like FHA. Can you use rents to qualify for a VA home loan? Absolutely. You can use a percentage of the rents from the unit you're not occupying as income for your debt to income ratios. So typically this percentage is 75%. So 75% of the rental income can be used to help you qualify for the mortgage. VA loans are a bit more flexible than other loan programs like Fannie Mae, Freddie Mac, or FHA. This is why it's crucial to work with an experienced mortgage professional who can help guide you through the process. They can consult with the VA and find ways to help you secure the property that you want. Unfortunately, some lenders may reject your application if you don't fit into their perfect borrower box. That's why understanding the differences between these programs and finding a lender who truly cares, it's so important. If you're considering house hacking, congratulations. It's a smart strategy that can help you build generational wealth. So you can convert your owner-occupied units into an investment property in the future and start building a passive real estate income. It's a fantastic way to start your real estate journey. I hope you found this video helpful. If you have any questions, feel free to ask them in the comments or visit our website. We're absolutely here to help you build wealth and memories with real estate. And remember, if you want to dive deeper into this topic, click the link in the description to read the full article. Thanks for watching, and if you're using this strategy, congratulations on making a smart move in your real estate journey. Don't forget to subscribe and hit the notification bell so you don't miss out on future videos. See you next time.